So that is how today ended up playing out. Now, as we head into the overnight session and tomorrow, the larger time frame question remains: is this multi-day balance breakdown below 45.50 half to 60 half going to sustain? And now we're getting kind of a shift in the directional bias that will be a little bit more lasting, or are we going to find a floor above the bull bear zone and eventually make our way back up into the balance we broke down from? So a pattern which is quite common in the markets is, you'll have a balance area. So you have this. So this is one balance area or range, and then this is another balance area and range. And what happens very frequently is that the balance areas will eventually merge to make a large overall range, right? So you have one balance very neatly defined over here. You have another very neatly defined over here. And now what could happen is the market may end up just kind of ping-ponging between the two. Buyer step in here, seller step in there, and maybe we build kind of another range for a couple of days that looks like this. Or we might have to go deeper into this balance to find buyers, and then we get a move back up, and then we consolidate. And eventually, when we look back maybe a couple of weeks from now, it might end up being that, we end up producing kind of a new balance area that kind of encompasses this entire range, or, encompasses like the bottom quadrant of this and the upper quadrant of this, and kind of makes a new trading range. So given that tomorrow is the unemployment number, the expectation overnight is for just more chop and consolidation, and then NFP is the catalyst that can trigger short-term directional movement or intraday directional movement. On the downside, the existing zones for the most part are still valid and in play. We can just expand initial support to incorporate the low from today. So we can just make it 0575 to 14.5 or 1475, and that is still a spot where buyers could certainly be active. And in the event that we break down, this is still a spot where buyers can defend. So that is still, the bull bear zone where buyers could still be active. And on the upside, the initial resistance zone is going to be key. So we're going to watch and see if tomorrow the market can take out today's high. So if we can break above 44.25 to 48.25, then that's a sign of strength. If we take out initial resistance, that's a intraday bullish indication. On the downside, if you take out 0575 to 14.5, that's a sign of weakness. It's an intraday bearish indication because it would mark another kind of smaller time frame or one-day balance breakdown. Buyers may still be active here. I think today's response from 0575 does take some weight away from the bull bear zone. So we've talked about timing and sequencing of events, and if the market had hit this zone today, it was an automatic long. We were definitely buyers down there. Now we have to be a little bit more cautious. Doesn't mean that we're not going to trade it, but we just have to understand that, today's price action and the move all the way back up into 44.25, it does take away some of that high probability reward potential at the bull bear zone. Now, if the market is exhausted into the bull bear zone, I still expect buyers to step in. But it's not as significant if they don't. I think that even if we break, the bull bear zone, we could still get buyers active at the support areas below, at 74.5 to 84.5, 44.70. I think those are still spots where buyers can step in. And the main thing to look out for in the event that, let's say, the market does go down into 44.74.5 to 84.5 is going to be whether buyers can then quickly reclaim the bull bear zone and start trading above it, and quickly reclaim today's low and start trading above it. Because with our intermediate time frame bias being bullish, the risk down here at these lower prices is on the short side. What I mean is that yes, sellers are dominant short term, but I don't think they have a ton of confidence. I think that they will exit at the first sign of some serious buyers coming in. And I think that it can result in a cascade effect where it triggers a short covering rally. Now, I think in order to trigger that short covering rally, you would need to see some strong buying come in. Like, you need to materially change the structure enough that it scares the shorts and forces them to cover. And that alone, I think, can push the market back up into 45.50 half to 60 half, and possibly even higher. So those are things we'll be on the lookout for, but we are not predicting that that is what's going to happen. There needs to be, and there is a fine line between preparation and prediction. Anytime you are preparing, there is an element of prediction built in. You cannot avoid that. If you read online, oh, don't predict, react. I mean, that's for the most part bullshit, because the element of prediction is inherently a part of trading. You can't sidestep it. There is no such thing as don't predict, react. What does that even mean? What is the actionable insight there? In my opinion, there is none. But, you'll see people philosophizing over it online. I think as a trader, you are always predicting. I think as a human being, you are always predicting. But there is that fine line of, okay, I have this prediction, but I am going to not put so much faith into it that I get blindsided to any other possibility, right? So it's this balance of having a sound trade plan and having enough confidence in your trade plan to trade it, but not so much confidence that you become completely blind to what is happening right in front of you. So it's this very fine balance between preparation, trade planning, with that element of prediction, combined with real-time awareness. And, okay, what is going on right now? What is the market telling me now? If my prediction is going to play out, how will I know? So as an example, if the market, let's say, does push down into 74.5 to 84.5, and you get a wide range bar, for me, this stuff is very visual. When I think about it and when I plan these trades, like, I can almost see the chart in my mind. So it's very visual for me when I think about it. And so when I think about, market going down into 74.5 to 84.5, scaring the buyers, and then there's like this momentum shift, and there's like a wide range bar, and there's a new tick high, and then you start taking out structure. How will the sellers respond? How will they behave? And I think that, if you really study this long enough, you can detect that in real time, where, you can see it in real time, like, okay, that's it, sellers are done. They are scared out of their positions, they are covering rapidly. Because we have been in a very bullish environment. This is not a bear market. This is still a bull market, okay? So until we see a significant sell-off and a break in structure where you start affecting the confidence of the buyers, and I'm talking larger time frame buyers, day traders, we're kind of irrelevant in the grand scheme of things in the market. Like we don't have much of an impact because we're flat every day, so we don't have any lasting impact in the market. But long-term buyers, intermediate time frame buyers, you know, they have a bigger footprint in the market, and and I think that we haven't seen enough of a structural break to challenge their confidence. I think right now we are in a state where pullbacks are still viewed as a buying opportunity. I don't think we're in a state where people are thinking the top is in, I'm going to start shorting rallies. And if that is going to become the state of the market, then we will be able to see that behaviorally over the next few days, right? So if over the next few days buyers can't reclaim 50 half to 60 half, right? If we cannot get back above 45, 50 half to 60 half, then it will start to shape up to be a topping pattern. Now, as day traders, we don't even need to look that far out. That's a good thing. But it doesn't hurt to think about it, and just kind of be prepared for it. So right now, I think that, it would take a lot of selling pressure for the market to put in a trend down type day. It can happen, we shouldn't just be blind to it. Like if in real time it's looking ugly, there's no need to lose money at the very minimum. But I think that it would take a lot more to shift the recent, this is a massive balance breakout that we had, right? And, we took out this high, which is kind of the top in the upper quadrant of this balance. We already consolidated there. There's a massive balance breakout that happened here. So I don't think that this level of bullishness just reverses off of a, what is this, like 8 or 10 days of balancing that we're breaking down from, and we're breaking into like 15, 20 days of balancing, right? I just don't think that this is going to overpower this and all of this. So I think right now we're still going to get larger time frame buyers looking for good value to either add to their positions or even initiate new ones. Now, if you take this balance out and you start dipping down, I mean, then of course we will adjust and adapt accordingly. But that's the beauty of day trading, is that we don't have to look too far out. We just have to be prepared for what's happening over the next day or over the next couple of hours. Our trades are going to live or die in a matter of minutes or an hour or two at most. So anyway, that is the view as we head into tomorrow. Let me see if there are any questions, and then we will wrap up.